Before we start this video, do like and subscribe to our channel and not miss on any updates.
So now let's start with the next one, which is Accounting Standard 16 on borrowing cost. I'll give you a small background because when you work in real life, you will come across a lot of instances where borrowing costs have to be capitalized and you need to know the logic. Okay, the simple logic is, if I am constructing an asset, for example, I am constructing a building and I have taken borrowed funds. I have borrowed money and I am constructing a building. Okay. Now, why should I capitalize the borrowing cost on this particular building? The logic is, if I had gone to a builder and if I had bought the building, the builder would have not only charged the raw material cost, the labor cost, the profit margin and all of that, the builder would have also recovered the finance cost that the builder would have incurred. So if I go to a builder and buy a building, they will add this borrowing cost, whatever they have borrowed or cost of capital you say, to the overall building, right? And then they will sell. So it reflects that there is a cost which is being incurred to bring this building to its present condition and location. That is why we have the standard on borrowing cost, which tells us that if you are incurring borrowing cost on something called as a qualifying asset, you should capitalize the borrowing cost. That is the underlying principle of the standard. Apart from this, there is nothing great in this standard. The standard simply says the borrowing costs that are directly attributable to the acquisition, construction or production of a qualifying asset should be capitalized as a part of that asset, right? So that is the first thing. Now, what is the meaning of qualifying asset? What is the meaning of borrowing cost? That is what we should understand. And any borrowing cost which is not incurred for a qualifying asset should be charged off to the P&L as an expense. So two parts. One is a qualifying asset, one is the other asset or other expenditure. Any borrowing cost and qualifying asset should be capitalized. Complete. That is the sentence that we need to remember. Now, two things, if you understand borrowing cost and qualifying asset, this standard will become a cakewalk for you. Okay. What is borrowing cost? Borrowing cost, generally what we understand, interest that we pay to the bank. Interest that we pay to the bank, or interest incurred on debentures, or interest incurred on any form of borrowing. Now, one thing what you have to keep in mind is, when we say borrowing, we are not talking about equity or preference shareholders, because those are not borrowings. When we talk about borrowings, we are talking about the loans taken, the debenture issued, or any other form of liability on which we have agreed on an interest. Okay, so liability means I have taken money, I have borrowed money. So borrowing cost includes interest and commitment charges on borrowings. So there could be interest, there could be processing charges, there could be any commitment charges. So a lot of time when you agree to borrow, you may have to pay certain charges. So that is also included. Then amortization of discount and premium on borrowing. This is not much relevant at your intermediate level, but if you want to understand, let us say I have debentures of 1000. I have issued it at 900. I have debentures having face value of 1000. I have issued it at 900. Now, when I redeem, again I have to pay, let us say 1000. So in that case, I got 900. I have to give back 1000. This extra 1000 that I am giving, that is also a part of my borrowing cost. Same way, say for example, if my redemption is at 1100, I collected 900 and giving back 1100, this 200 also becomes my borrowing cost. So this 200 generally is amortized over the life of the debenture. Okay. How to calculate that and all of it is not in the scope of your syllabus. You will understand about this once you come to the CA final level, right? Then amortization of ancillary cost. So this can be again your processing charges or any other cost like legal fees, stamp duty, something like that. Finance charges for asset acquired on finance lease. So when we come to accounting standard 19, we'll talk about finance charges on finance lease. that also is considered to be interest expense. And exchange differences, this is very important that you need to understand. So generally interest rate, premium, discount, interest, premium, discount, processing charges, all of this is a part of your borrowing cost, and exchange differences are also part of your borrowing cost. In the examination, they will tell you the rate 10%, something 12%, whatever is the rate, that rate will be given to you in the examination. You will use that rate and you will do the calculation, right? This is more important for answering MCQs if they at all they give a theory question. Now, what is this exchange difference? We need to understand. Okay, so coming to the next part, which talks about exchange difference. Generally, we don't get questions, but it is important for you to understand, because if at all it comes, again, this is a scoring one, right? Now, when we say exchange difference is covered by accounting standard 11. When we come to accounting standard 11, we'll understand what is this exchange difference. Now, generally what happens, if you're borrowing in US dollars, the rate of interest will be lower. Let us say rate of interest is 3%. If you borrow in dollars, rate of interest is 3%, right? Let us say we borrowed $10,000 when the exchange rate was 80 at 3%. So you have borrowed 80, 1212. You have borrowed 8 lakhs. You have borrowed 8 lakhs, right? Now, you borrowed at 3% and you have to repay after 1 year. You have to repay after 1 year. When you repay after 1 year, what you have to do is, you have to pay interest of 10,000 into, let us say 3%, that works out to $300. Okay, it works out to $300. But the rate applicable on 31st of March of, let us say 25 is 85. Is how much? 85, right? So you have to pay interest of 300 into 85, that is 300 into 85, that is 25,500. 25,500. This is the interest you have to pay. But one more thing what also happens is, on this borrowings of 10,000, what you got 8 lakhs. When you repay, you have to repay 10,000 into 85, that is 8 lakhs 50,000. So what is happening is, one is you are paying interest of 25,500, but you are also paying 50,000 extra. You are paying 50,000 extra, which we call exchange difference. This is the exchange difference. Now, what the standard says is, assume the entity had borrowed same 80 lakh or 8 lakhs, not 80 lakhs, 8 lakhs in INR. If you had borrowed 8 lakhs in INR, interest rate is equal to 10%. So if you borrow in INR, you have to pay 10% interest rate. So what is the interest cost? Interest cost is 8 lakhs multiplied by 10%, that is 80,000. 8 lakhs multiplied by 10%, 80,000. How much is the interest we paid here? 25,500. So the standard says, if you just take 25,500 as the interest cost, it does not reflect a true picture, because you have to repay a higher amount, and that exchange difference also captures some component of interest. Okay, so there is a concept called interest rate parity theorem in foreign currencies that you'll understand in final, but you just understand that not only this 25,500 is my cost, this 50,000 is also my cost. This 50,000 is also my cost. So what the standard says is, whatever interest you have saved, so if I had borrowed in INR, I had to pay 80,000. if I borrow in foreign currency, I have to pay 25,500. So I have saved 005. 9 minus 5 is 4 and 7 minus 2 is 5. I have saved 54,500. I have said how much? 54,500. So what the standard says is this, to the extent of saving, whatever is the exchange difference, to the extent of this savings should be capitalized or should be considered as borrowing cost. Not capitalized, should be considered as borrowing cost. I am repeating this again because a lot of students find this difficult to register. First, you borrowed $10,000 at 3% when the rate was 80. Then what happened? At the end of year 1, you paid interest of 3% when the rate was 85, that is 25,500. You also had to repay the loan. Even if you don't repay the loan, if it is a restatement of the loan that we understand in accounting standard 11, it is 10,000 into 85, 8,50,000. 10,000 into 85, 8,50,000. Right? Now, we paid 50,000 extra here and we paid 25,500 here. That is our total cost, you can say. What the standard says is, calculate the INR interest cost, compare that with foreign currency interest cost, whatever is the difference here, this is called savings. Okay. Exchange difference to the extent of the savings should be considered as borrowing cost. Now, in our example here, entire 50,000 can be considered as savings against this particular thing. So here I have saved 54,500, but I have also spent 50,000. So exchange difference up to 54,500 should be borrowing cost. Now my exchange difference itself is 50,000. So borrowing cost on account of exchange difference will be 50,000. To the extent, exchange difference to the extent of saving should be borrowing cost. Now, if, for example, INR interest rate is equal to 8%. INR interest rate is 8%. So, interest cost will be how much? 8% into 8 lakhs, 64,000. What is my foreign currency cost? Foreign currency cost is 25,500. How much did I save? I saved 005.
It's 11 o'clock.
8 and 6 minus 2, 4, 3. I saved 38,500. So, what the standard says? Up to 38,500. Up to 38,500, you should consider it to be interest cost. So, borrowing cost on account of exchange difference is equal to 38,500. And balance exchange difference. See, my total exchange difference is 50,000, out of which to the extent of savings is my borrowing cost, and balance, that is 50,000 minus 38,500, that is 11,500, should be treated as per accounting standard 11, and that is how it is done. Now sir, what if the exchange difference is less than the savings? Full amount you will consider. Okay, so what you have to understand is, if exchange difference is greater than savings, you will take savings as borrowing cost. Okay, if exchange difference is greater. If exchange difference is less than savings, full exchange difference will be your borrowing cost. Is this clear? Others, is it clear? This is what you have to remember. If exchange difference is greater than savings, entire savings will be borrowing cost. If exchange difference is less than savings, full exchange difference will be borrowing cost. So here what we did, in the first case, Exchange difference is less than savings. Full exchange difference will be borrowing cost. In the second case, exchange difference is greater than savings, so savings will be considered as borrowing cost. So exchange difference to the extent of savings will be treated as borrowing cost. Balance exchange difference will be taken to accounting standard 11. Okay, so that is one thing, critical aspect of this standard. So similar thing, I've given it as an example here as well. This example you can have a look at it. Now in examination, a lot of time we get confused as to how to calculate. So first, step 1, calculate interest on USD or any other currency borrowed. Okay, convert to INR using rate of payment or year-end rate. Step 2, calculate exchange difference. Step 3, calculate INR interest. Savings is equal to INR interest minus USD interest. Now you may ask, sir, what if this INR interest itself is less than USD interest? It is not possible, first thing. Even if that happens, then there is no savings, so you'll just ignore that. Okay, then you will compare savings with exchange cost. So what if there is an exchange gain? You will ignore it. No need to check on that as well. Okay, I hope this is clear. Next is qualifying assets. Now what the standard says is, a qualifying asset is an asset which takes substantial period of time to get completed for its intended use or sale. So basically, if I am constructing a building, it takes 5 years to construct a building, that becomes my qualifying asset. I have to construct a bridge, it becomes my qualifying asset. If I have to, construct a plant and machinery which takes 3 years, 4 years time, that becomes a qualifying asset. So it says it takes substantial period of time, and generally a period of 12 months is considered to be substantial period of time. Sometimes a period of less than 12 months also can be considered substantial period of time if the management thinks so. Okay, and sometimes a period greater than 12 months may also not be considered if the management thinks so. But generally 12 months is considered to be a substantial period of time. Okay, now this either will be given to you in the question. If it is not given, you have to make an assumption. So qualifying assets can be manufacturing plant, power generation facilities, inventories that require a substantial period of time to bring them to a saleable condition. This can happen in case of builders. This can happen in case of wine. Okay, so wine takes a lot of time to get ready for its intended sale. That can be a borrowing. That can be a part of your qualifying asset and investment properties. Exclusion from qualifying asset, all other investment, equity shares, debentures and all of that. So in fact, in your September 24 examination, there was an MCQ where a person had borrowed money and put it as investment in another entity. Okay, so that should not be considered. Then inventories that are routinely manufactured or otherwise produced in large quantities on a repetitive basis over a short period. So if my inventory takes a very short period of time to get produced and I am doing it on a repeated basis and at a large scale, I should exclude. Then assets that are ready for their intended use or sale when acquired are not qualifying assets. So a lot of time what happens is, in the examination they will give you a question. We gave advance for purchasing a truck. Truck is not a qualifying asset. Truck, when you purchase the truck, it is ready for use in the condition in which you purchase. Okay, sir, we gave advance today, we will receive it after 6 months. Even then, the truck that you get is in a usable condition. It is ready for its intended use. So trucks, any machine which can directly be used, all of these are not qualifying assets. So here you have to be careful as to, in the examination, what is qualifying, what is not qualifying. Sometimes they say working capital purpose. Those are also not qualifying asset. Generally, inventories are also not qualifying asset unless the question says it is a qualifying asset. Okay, so things like furniture, small items of furniture, your plant which is ready for installation, then machinery, not a plant. Entire plant may take time to complete, but a single machinery will not take time to complete. Computers that you purchase, okay, vehicles that is purchased, trucks those are purchased. All of these are not qualifying asset. Investment in equity shares, investment in debentures, these are also not qualifying asset because they are ready. You actually don't use it, but they are ready. So clear with the definition of qualifying asset and what is a borrowing cost. After this, the next thing we need to understand is general borrowing and specific borrowing. Okay. Now, borrowings can be of two types: on specific borrowing and general borrowing. So, what is the specific borrowing? If I borrowed money for a particular project, specifically I borrowed 1 crore to construct a building. It has been borrowed for a specific project. It is a specific borrowing. What is general borrowing? I have not borrowed money for a specific purpose or a specific project. I generally borrow money for multiple different purposes. That is called general borrowing. How to deal with general borrowing? We'll take an actual question and we'll do it. But for specific borrowing, what you need to understand is borrowing cost is equal to total interest minus temporary investment income. Now, when I say total interest, this total interest is from the date of borrowing. You will take the total interest from the date of borrowing and you will reduce any temporary investment income. Now, what does that mean? For example, I have borrowed money on 1st of April. I borrowed money on 1st of April to construct a building. The building construction started on 1st of June. The building construction started on 1st of June. Now, in this 2 months period, my funds are remaining idle. My funds are idle for 2 months period. What will I do? I will invest these funds in some other investment, maybe fixed deposit, maybe I'll buy some equity shares, whatever it is. So this income that you receive from this temporary investment of idle funds has to be reduced from the total interest cost. So what you will do actually is, if you look at a timeline, 1st of April, 1st of June and 31st of March, you will pay interest for 12 months and you will earn income for 2 months. So you should never do that. I will capitalize the interest expenditure for this period only and I'll expense this. That is not allowed. Because it is a specific borrowing, you will take full 12 months interest and you will reduce 2 months income if at all it is given in the question, and you will reduce from that. So any temporary income or any income from temporary investment that is received has to be reduced. Here a lot of students make a mistake when they take the dates. For specific period, you will take specific borrowing, you will take full period only. Is it clear? You will take full period and you will reduce any income that is received on investment of those funds. Is that clear? Right? So funds which are borrowed for a specific purpose is called specific borrowing, and you will capitalize the borrowing cost less any income earned on temporary investment. You have to take full period. Then there is a concept of general borrowing. In case of general borrowing, there is no direct relationship between borrowings and the qualifying asset. I have generally borrowed 100 crores. Out of that 100 crores, I will use something for working capital. I will use something for my plant and machinery construction. I will use something for investment. So that is what is called general borrowing. In case of general borrowing, what we have to do is we have to calculate something called as capitalization rate. Capitalization rate has to be computed. So what is this capitalization rate? What you will do is you will take total cost on general borrowing divided by weighted average general borrowings multiplied by 100. You will calculate something called as the capitalization rate, and using that capitalization rate you will calculate amount eligible for capitalization. So first you will calculate the capitalization rate. You will multiply the expenditure incurred on qualifying asset with the capitalization rate. This is the borrowing cost eligible for capitalization. But for general borrowing, you will take date of construction till the date of completion or the date of year. Okay, so that is how you have to do. Now this is better understood by a question. So here you see this question. Please, if you get a question like this in the examination, I expect you to do it correctly and score full marks. I don't want you to make any mistake in these type of questions. Okay. Ax Limited began construction of a new plant on 1st of April of 11 and obtained a special loan of 4 lakhs to finance the construction of the plant. Interest rate is 10%. Expenditure that was made on the project is as follows. On 1st of January of 2011, I think the dates are wrong. 1st of April you consider. Yeah, this is not 1st of January. I think typing mistake. 1st of April is 5 lakhs. So this date is 1st of April. This is 1st of August. And this is 1st of January of 12. Okay. Now on 1st of April we spent 5 lakhs. On 1st of August we spent 12 lakhs. And on 1st of January of 2012 we spent 2 lakhs. Okay, that's what is spent. The company's other outstanding non-specific loan was 23 lakhs at interest rate of 12%. Construction of plant was completed on 31st March of 12. You are required to calculate the amount of interest to be capitalized as per the provisions of A16 and pass a journal entry for capitalizing the cost and the borrowing cost in respect of the plant. Now here what has happened is you borrowed 4 lakhs. You borrowed 4 lakhs specifically for the project. When they have not given the rate of borrowing, we'll assume we borrowed on 1st of April only. So that is borrowed. We have spent 5 lakhs on 1st of April. Now if you have spent 5 lakhs on 1st of April, what you need to understand is out of this 5 lakhs, specific we will assume is 4 lakhs. General we will assume 1 lakh. Then this 12 lakhs entirely is general and this 2 lakhs entirely is general. First you need to get this bifurcation. Then they have said they have borrowed 12% rate. At 12% they have borrowed. So we will take the 12% rate and apply to the general borrowing. This 4 lakhs we will apply 10%. So what is the amount to be capitalized? 1st of April 4 lakhs specific borrowing outstanding for or used for 12 months 10%. The rate is 4 lakhs into 10%, 40,000. Sir, what if the amount was spent on 1st of May of 11 but the amount was borrowed on 1st of April of 11? Even then for specific borrowing you will take the 12 months period or the full period of the loan. That is from the date of loan till the date of year end or date of completion for specific borrowing. For general borrowing you will take the date of expenditure till the date of completion or the date of year end. Okay. Then this 1 lakh is also spent for 12 months. So this is 12%. 1 lakh into 12%, 12,000. Then 12 lakhs was spent on 1st of August. Be careful in counting the months. August, September, October, November, December, January, February, March. 8 months. So it will be 12 lakhs into 12% into 8 by 12, 96,000. And 2 lakhs for 3 months at 12%, 6,000, 1 lakh 54,000. Okay. So this 1 lakh 54,000 is the borrowing cost. So cost of plant 19 lakhs, that is 5 plus 12 plus 2, and interest 154, total is 2054. The entry will be plant account 2054 to bank account 2054, that is cost plus interest. Right? So that is how we'll do the calculation. This is another question where we will calculate weighted average cost or weighted average capitalization. Mesa First Limited began a construction of a new building on 1st of April of 17. It obtained 2 lakhs as a special loan to finance the construction of the factory building on 1st of January at an interest of 8% per annum. Further, expenditure on construction of the factory building was financed through other non-specific loans. The details of loan are 9%, 12% and 14%. That is 4 lakhs, 5 lakhs and 3 lakhs. Expenditure that was made on the building project were as follows. 1st of April 3 lakhs, 31st of May 2,40,000, 1st of August 4 lakhs, 31st of December 3,60,000. Construction of the building was completed by 31st March. As per the provisions of A16, you are required to calculate the amount of interest to be capitalized and pass journal entry. Again, you see, they ask us continuously, they keep on asking us what is the amount of borrowing cost to be capitalized and pass the journal entry. So when we pass the journal entry, that itself will give us 1 mark. Okay, so that is what is important. Okay, now here we have a specific borrowing of 2 lakhs. I think this also is 1st of April. Okay, there is some issue in the calculation. 1st of April, 2 lakhs has been borrowed on 1st of April. Assume that. I'll cross check with the RTP once again. And building was constructed starting on 1st of April. Okay, and construction completed on 31st of March. Now, as far as specific loan is concerned, the rate given is 8% per annum. So what you will do? You will take the entire 2 lakhs into 8%, 16,000 becomes the borrowing cost. Now, out of this loan taken, they have given us expenditures on various dates. On 1st of April 3 lakhs, 31st May 240, 1st of August 4 lakhs, 31st December 360. So first expenditure of 3 lakhs, you can say out of this 3 lakhs, 2 lakhs is specific plus 1 lakh is general. This is general, this is general, and this is general. This assumption you can follow and solve the question. Now, for general borrowing, we need to calculate weighted average capitalization rate. We have to calculate weighted average rate for capitalization. How to calculate that? You have 4 lakhs, 5 lakhs, and 3 lakhs. So what you will do is, you will calculate interest. So 4 lakh into 9%, what is the interest? 36,000. 5 lakh into 12%, 60,000. 3 lakhs into 14%, 42,000. So total will be 60 plus 6 plus 4, 10, 10 plus 3, 13, 1 lakh 30, 1 lakh 38,000. Is it right? Okay, I'll just do it as per 1 lakh 36,000 plus 60,000 plus 42,000, that is 1 lakh 38,000. Total borrowings is 4 plus 5, 9, 9 plus 3, 12. 12 lakhs. So weighted average rate is equal to 1,38,000 divided by 12 lakhs, 1 lakh 20. This is 12 lakhs, so 12 lakhs. So that will be 138 divided by 12. If we do, we get 11.5%. This is the capitalization rate. Now, when we do the capitalization, the average rate worked out to 11.5 lakhs. Okay, the rate worked out to 11.5 lakhs. Then how much is the expenditure to be capitalized? This is an assumption which is taken where you have taken average expenses, but we can directly do the calculation like out of 3 lakhs, 2 lakhs is specific, 1 lakh is general. So if 1 lakh is general expenditure, 1 lakh for 12 months, 1 lakh into 11.5% into 12 divided by 12, you get 11,500. Same way, 2,40,000 next borrowing is for 10 out of 12. So 240 into 10 out of 12 multiplied by 11.5%, you get 23,000. This you will get 30,000. This you will get 10,350. You can do the calculation on your own also. 240 into 10 divided by 12 into 11.5. Like this, if you do, the total expenditure comes to 75,517 plus 16,000. If you do, it is 91,517. So the entry, actually we have not passed the entry, but yes, you can pass the entry. Debit building, credit bank. Okay, the same entry what we passed in the previous example. Now, what students sometimes tend to make mistake is while calculating this weighted average interest rate. So that is where you have to be slightly extra careful when you solve this type of question. Okay, any question on calculation of the weighted average cost of capitalization? No. Very good. Let's look at this one more question. On May 16, Capacity took a loan to be used specifically for the construction of a new building. Construction was completed in January and the building was put to use immediately thereafter. See, even if the building is put to use later, till the time it is completed, only till that period you can capitalize. Interest on the actual amount used for the construction of the building till its completion was rupees 18 lakhs, whereas the total interest payable to the bank for the period ending 31st March was 25 lakhs. Can 25 lakhs be treated as part of cost of factory? See, the 18 lakhs can be borrowing cost for building, you can capitalize it, but this extra 7 lakhs that is paid after the building has been completed, this has to be charged to P&L. You can only capitalize it till the time the building has been completed. This again, similar to calculate weighted average interest cost. You can practice it on your own. Okay. Now, after we have discussed this, the next thing that we have to discuss is when do we start capitalization and when do we suspend the capitalization. And one more thing, if after capitalization carrying amount is greater than recoverable amount, then you can only show till recoverable amount, you cannot show a higher carrying amount. For example, if the carrying amount of inventory after including borrowing cost is 10,000 but NRV is 9,000, you can show the inventory only at 9,000. You cannot show it at 10,000. So you should always check whether the recoverable amount is greater than the carrying amount or not. Okay. Now, very important, this is from MCQ point of view. Commencement of capitalization. We can start capitalization of borrowing cost when these conditions are satisfied. Number one, expenditure for acquisition, construction or production of a qualifying asset is being incurred. You are incurring expenditure. Now you may say, sir, if we took a specific loan and we did not incur expenditure, why are we capitalizing for the full period? Please understand, we are reducing the temporary income. So in effect, we are only capitalizing it for the expenditure period. So expenditure must be incurred. Expenditure on what? Either acquisition, construction or production. Second, borrowing costs are also being incurred. So you are also incurring the borrowing cost and activities that are necessary to prepare the asset for its intended use or sale are in progress. So three things. Number one, we are incurring expenditure. Number two, we are incurring borrowing cost. Number three, activities are going on. Now there is a typical example where we say sometimes the active construction or active development or the activities are stopped temporarily. If the activities are stopped temporarily, during that period, we should suspend the capitalization. So, capitalization of borrowing cost is done when the above three conditions are satisfied. Whereas, if there is a temporary delay in which the active necessary developments are interrupted, then there will be suspension of capitalization. Means you will stop. For example, if there is a labor strike, okay, if there is a labor strike, during that period active work is not happening. So for that period, you will not capitalize the borrowing cost. Okay, for that period, you will not capitalize the borrowing cost. But if the temporary delay is necessary part of the process, then there will be no suspension. So for example, if you have to construct a bridge, you need to have a certain low level of water. So while constructing a bridge, maybe during monsoon, the water levels are high and you cannot construct the bridge. So that is a normal delay. It is a planned delay. So that during that period, you will continue to capitalize the borrowing cost. But if it is abnormal, if it is not planned, labor strike, raw material shortage, some other thing happened which was not planned earlier, then in that case, you will not capitalize. That is called suspension. Suspension means you will stop temporarily. Subsequently, when the activities resume, you will start capitalization. Okay. Then, when do you stop the capitalization? You will stop when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. Substantially, please remember, substantially, everything has been done. I have to put a small tap in the bathroom. Building is completed, only one tap is pending. Will you stop? Will you continue to capitalize borrowing cost? No, because substantial activities have been completed. Or everything has been completed, it has not yet been opened. Opening ceremony is pending. Then also you will not continue to capitalize, you will stop the capitalization. When substantially, let us say 95%, 99%, substantially all the activities have been completed, small cleaning work is pending, small fitting work is pending, in that case, you will stop capitalizing the borrowing cost. Also understand, sometimes what happens is the buildings are constructed in blocks. Let us say block A, B, C. Block A is complete, on B and C activities are continuing. So borrowing cost for block A should be stopped. If you can independently use or sell the first block. But you say, no, sir, all three blocks have to be completed, only then we can use it, then you will continue to capitalize. Okay, so you'll stop capitalization when substantially all the activities necessary to prepare the qualifying asset for its use or sale are complete. Some small activities like ribbon cutting activities, some small administrative activities, if they are pending, you will not continue to capitalize. So we have seen when to start capitalization, when to suspend capitalization, when to stop capitalization. Suspension happens during periods where active development is interrupted. Okay, you will not stop when the technical or administrative work is being carried out or the delay is necessary part of the process of getting the asset ready for its use. Now this can be triggered as a MCQ or a theory question in the examination. Okay. Now here, let's look at some more questions. GHL Limited obtained a loan for 70 lakhs from JKL Bank to be utilized as under. On 31st March, construction of factory shed was completed and machinery which was ready for its intended use was installed. Delivery of truck was received in the next financial year. Factory shed, purchase of machinery, working capital. Sorry?
Your audio is not clear, sir.
Vishnu and all, are you also facing the same audio issue? Is anybody else
facing?
Sorry?
Not at the moment, but I think around 2-3 minutes ago it was a little near, but I think that was my network issue.
See, it can be a issue of network, but if I look at my end, the audio is going at full fledged. So the laptop is pretty close to me. Okay, so okay, when you say not clear, is it what? Lagging or what? Just a moment, I'll switch to another Wi-Fi. Okay. Sometimes the system gets heated up and that can also cause a problem. Just give me a moment. I think there is a lag due to internet. Okay, can you confirm if it is better now?
Yeah, audio is better. So picture, I think yesterday also same. Your picture is not clear. So.
That's what I'm saying. No, don't focus on my picture. If my audio and screen is clear, just focus on the screen.
Audio and screen is clear.
Now is it clear, Vishnu and Shyamala?
Yes.
Yeah. Okay. I think it was the system being slightly heated up. I didn't turn on the AC. It's somehow little cold, so I just now turned on the AC. It should settle down. Okay. Yeah. So now here we are looking at this particular question where a company has obtained a loan of 70 lakhs from JKL Bank to be utilized for construction of factory and all of those things. So factory is there, machinery is there, working capital and advance for purchase of truck. Total interest of 9 lakh was charged by the bank for the financial year. Show the treatment of interest under AS 16 and explain the nature of the asset. So now here, sometimes what students think is because the truck was delivered next year, truck becomes a qualifying asset. It is not that way. It does not work that way. So first you have to decide whether it is a qualifying asset or not. Then the total interest you have to allocate between all of these in the ratio of their expenditure. So what you will do basically is whatever is the interest 9.1 into 25 out of 70, or the better way is you can calculate a single rate using 9.1 divided by 70. If you do, you will get a rate. That rate you apply to all these assets and you will do the treatment accordingly, right? Now first, construction of factory shed. Now construction of a factory shed, if it is first whether it is a qualifying asset, we have to see whether it took substantial period of time. Now when did we start? We started the construction. They have not given the date of construction, but assume it was started on 15th of April and it was completed on 31st of March. Now it is less than 12 months. Now do we treat it substantial? You have to give both the assumption. If this period is substantial, you will capitalize the interest. So 9.1 divided by 70 multiplied by 25, 3.25. You will charge off to P&L if it is not a qualifying asset. But if you treat that it is a qualifying asset, then you will capitalize. Second, purchase of machinery. If I am directly purchasing a machinery, I will assume, unless the question tells me otherwise, that it is ready for its intended use. So this has to be charged off to P&L. Working capital has to be charged off to P&L. Advance for purchase of truck. Again, truck is ready for its use when I get the delivery of truck. Hence, that will be taken to P&L. Okay. So these treatments, now when you get a question, if it is a 4-mark question, and even if you make a mistake in purchase of machinery or advance for purchase of truck, you will at least be able to score 3 marks. So don't leave these type of questions in the examination. Alright. Then, similar question. Amazing Construction obtained a loan of 32 crores to be utilized as under. Construction of sea link across 2 cities. Work was held up totally for a month due to high water levels. Now we just gave the example. If it is high water level and we have to stop the work because it is necessary as a part of the construction process, you will capitalize fully. You will not suspend the capitalization. Purchase of equipments and machines, assume it is ready for use. Working capital will be expense. Vehicles, expense. Advances, expense. Technical know-how also, expense. So why expense? Because it is ready for its use. It is ready for its intended use. So you will not capitalize, right? So construction ceiling, capitalize. Machinery and equipment, expensed because it is ready for its intended use. Working capital, expense because it is ready for its intended use. Vehicles, advance for tools, purchase of technical know-how, all of these are expensed, and this will be the amount to be capitalized. Sir, should we present a tabular format? Better. Sir, can we write in statement format? That also is acceptable. Either ways it is possible. With some theoretical explanation. So this we have already taken in the example. So same thing is asked there. So nothing new. So here also in this particular case, if you see whether interest on borrowing for the period prior to the date of setting factory should be capitalized, although it has taken less than 12 months. So here you have to say it is a rebuttable presumption that 12 months is a substantial period of time. It can be less than 12 months, it can be more than 12 months. So you have to give both the assumption. If the company considers less than 8 months to be substantial period of time, you can capitalize. If the company does not consider 8 months to be substantial period of time, you have to expense. Okay, so let us look at past exam questions. See, same questions that you have discussed. 7 marks, May 24. Sir, if it was asked in May 24, will it be asked in January 25? We cannot make such predictions. Okay, it may not follow a pattern. They may ask same type of questions also. If they ask, you will be able to score good marks. So here again, company's loan 15%, 8%, you will use it to calculate weighted average cost, and so I think this 1st August should come here. This is 1st August. Same thing what we have done, the four questions, 7 marks. There is nothing complicated here. Only thing here is what has happened is specific loan of 14 lakhs was taken. So 14 lakhs, first 4 lakhs and 10 lakhs is specific borrowing, and what is the date? They didn't mention the date. 1st of April is the date, and completed on 31st of January. Now see this, expenditure here is 1st of April, here is 1st of August, but we have taken 10 months in both the cases. Don't take 12 months because the construction was completed in January. So we have taken 10 months fully here. We have taken 10 months fully here, and we have done the calculation, and they have given temporary income as well, I guess. Interest income of 15,000 was earned when the loan was held in anticipation of payment. So that you will reduce from the total cost. Okay. Again, 23 5 marks. Began construction of new building. Loan of 60 lakhs from Data Bank Limited was taken at interest of 8%. This was utilized for construction of building. So this is specific. 20 lakhs Satya Bank, out of this 60,000 was utilized for working capital. Total interest was of 192 were paid to Satya Bank. So whatever is utilized for working capital purpose, that is out of 20 lakhs, 6 lakhs is for working capital purpose. That working capital you will expense it. Construction was completed by 31st January. My pencil goes bad. Okay. Construction was completed on 31st January. None of the loan was repaid during the period. Out of the loan from Data Bank, surplus fund were temporarily invested for short period of time. Investment gave us 30,000 income. So same concept. So if you see, borrowing cost on loan of Data Bank is 60 lakhs into 8% for 10 months minus 30,000, that is temporary income, that is 3,70,000, that will be fully capitalized. Okay. After the construction period has been completed, the remaining expenditure will be charged to P&L. Okay. For Satya Bank, you will take only 1,92,000, that is the interest, into 14 out of 20. Why is this 14 out of 20? 20 lakhs is the total loan here, and out of that 6 lakhs is for working capital. So 14 lakhs is for the purpose of construction of the building. So only that portion will be capitalized. Remaining portion will be, charged to P&L. Okay. Again, May 19 5 marks, same type of question. So if you see, there is a pattern of these questions. November 25 marks. Again, all these costs are there. We have already discussed this question. So there is 90% chance whenever a question gets asked, these are from the previous pattern only. And this I am not telling you from the last 4 or 5 years. I wrote examinations in 2005, 2006 and 2007 and 2009, inter and final. The pattern of questions which have been asked, most of the cases are repeated and in the same manner. So if you go through these questions, if you have comfort in these questions, you will be able to do good in the examination. Okay, again RTP, more or less it's similar type of questions you can see. Yesterday I told you that I'll add the notes. I could not add, so today I'm uploading the notes for whatever chapters we have completed, and we will also be uploading the backup of these recorded videos. Okay, so that if you want to go back and have a look at it again, you will be able to do that, right? So with this we complete accounting standard 16 as well. So we are done with AS2, AS10, AS12, AS16 and AS26. 5 standards have been completed. Tomorrow we will take up accounting standard 19, a very important standard as far as examination is concerned. Then we'll see, because that itself will take 2 hours. So we'll complete AS19 fully tomorrow. Okay. Any questions, or can we end the? No questions. Thank you.